This is Kelly Wright at the Money Show, and I'm with Thomas Grimes of Reeves Asset Management. Thomas, you guys have a great utility ETF called, the symbol is Utes.
Reeves Utilities ETF, yes.
Okay, so here's what I want to talk to you about. We've got a lot going on. We've got a lot of changes. There's a lot of stuff happening in the markets. We were on a glide path for a long time because the Fed had rates artificially low.
Yes.
They would whisper sweet nothings. Every time the markets got concerned, they were always there to smooth, okay? Well, those days are over. We've got an entire generation now of investors who know nothing except quantitative easing, okay? And they don't get the best education in the world either because, let's face it, Wall Street does a hideous job. But that's not their job. It's our job. Right. So, a lot of emotions and things that are tied into when people hear rising interest rates, okay? So it conjures up a lot of stuff. Some of it's true, some of it's real, most of it isn't, okay? So let's hit on this. Rising inflationary environment and rising interest rates, bad for utilities. Why is that wrong?
That is the conventional wisdom, Kelly.
It is.
And the reason it's wrong is because there are many utilities in the sector today that are growing their earnings and they're growing their dividends. And when it comes down to it, they're common stocks.
Okay.
And if you're a common stock and your earnings are going up and your dividends are going up, you can increase in value. You can overcome a steady, gradual increase.
So forget about the fact you're a utility. You're an operating company.
That's more the way to look at it.
Okay, so you're an operating company.
And we're not a bond. That's the most important thing.
Okay, so your widget is energy or what? Okay, but you're an operating company, but your product is a utility.
Yeah, at
okay.
our firm, we've always focused on fundamental bottom-up research. Know the companies, know the individual state regulatory environments. Our analysts actually go and fly around the country and sit in on utility meetings, meet with the commissioners, because it's very important for this operating company to operate in an environment that's hospitable to it.
Okay.
The best utility in recent history has been NextEra Energy down in Florida, which owns Florida Power and Light.
Right.
They have so many things going for them that you would look for in any common stock. Lots of people are moving to Florida because the baby boomers are aging and they want to get out of the high tax, cold weather Northeast. So they're coming down to Florida. So you've got a growing population base. You've got a lot of rich hedge fund managers leaving Connecticut, New York, New Jersey, moving to Florida.
There's something about no state income taxes, but anyway.
Wealthy people are attracted to low tax regions, and Florida is one of them. NextEra also happens to be very well managed. They've always stuck to their core business of running the utility, and they have regulators who understand we get a lot of storms down here. We can't afford to have our residents and businesses out of power for more than a few days after a storm. And Irma, which hit really hard most of the state, they did a phenomenal job of getting power restored very quickly because of the billions of dollars they had invested in the previous 5 years to harden the grid. And utilities have to do many things today. They have to protect the grid against cyber attacks and other kinds of terrorist attacks. They have to protect the grid against storms. And they have to shift their fuel mix more towards cleaner fuels, wind and solar. And it costs money, and the regulators are allowing them to invest that money and earn a return on it, which gives us very good visibility on their future earnings.
You know, I think it's an important point, and I'm glad that you're making it, because for a lot of years, there were some pretty tough regulatory environments.
Yes.
And when Thomas talks about the regulators letting them do what they need to do, you're basically talking about their ability to raise rates. Okay? Which is, you sell a product, you sell it for a profit, okay? If there's demand for your product, you get to raise prices. I mean, that's capitalism, that's the way it works.
Here's what's even better, Kelly. Because natural gas is now the primary fuel, the highest percentage that's exceeded coal in terms of fueling power plants. Natural gas prices have been so low, and there's such a supply of natural gas in America today that it should stay low. So, and utilities are keeping operating expenses low, so there hasn't been the rate pressure. So when they keep rates stable, the regulators become even happier. So it's terrific for them.
You know, folks, you pay attention to this guy and you're going to learn some good stuff. This is Thomas Grimes with Reeves Asset Management. I'm Kelly Wright at The Money Show. Thanks for joining us.
Thank you, Kelly.